Now, two big developments with implications for Britain's place in the European Union took place today, one in Berlin, the other in London. At a meeting in Germany, President Sarkozy again announced his intention to push ahead with a financial transactions tax, something Britain opposes, of course, and Angela Merkel appeared, albeit reluctantly, to agree with President Sarkozy. Meanwhile, here, the Deputy Prime Minister Nick Clegg said any new treaty on fiscal union should be folded into existing EU rules, which some interpret as meaning Britain might accept the new agreement despite David Cameron's veto last month. Our diplomatic editor Mark Urban reports.
President Sarkozy's visit to the birthplace of national icon Joan of Arc reminded us that he faces an election in 4 months. Trailing in the polls, he's tried to rouse his vote with patriotism, castigating Britain for its tactics during the Eurozone crisis and moving ahead briskly with a tax on financial services.
I am fully committed to the principle of a tax on financial transactions. If we find ourselves in this situation, it's because there was scandalous and inadmissible deregulation of the financial market. It's only normal that those who contributed towards placing us and the rest of the world in this situation for the past 3 years participate in solving the problem. My conviction is that if we do not lead by example, it will not be implemented.
Britain has entered the lists against France again, opposing the new tax.
I would say to these other European leaders, if you want to do what Britain has, we've got a bank levy, so the banks contribute properly, we have stamp duty on share dealings, you can do those things. But the idea of a new European tax, when you're not going to have that tax put in place in other places, I don't think is sensible, and so I will block it.
And if Britain is opposed, Germany isn't exactly enthusiastic about President Sarkozy's plan. Chancellor Merkel knows that implementing the Tobin, Robin Hood or financial transfer tax, whatever you call it, would be very hard without unanimity. She today preferred to emphasise moving ahead with the wider fiscal package that had been opposed by Britain.
I personally think there is a way for a transaction tax in Europe. We do not have agreement at the moment, but I will try to get it through for 27 member states. We need to consider this agreement and need to give a proposal in order to have a transaction tax. We will further fight for that.
In fact, the more you look at the proposed tax that's produced so much political heat in recent weeks, the less likely any European implementation of it is in the near future. The UK has an opt-out on new taxes, and French banks warned today that implementing it in their country alone could be disastrous.
If there is a financial transaction tax in the euro area, then that would drive business perhaps to London. The euro area will not be possible to rule that financial transactions in euro have to be taken here. And therefore, if it comes about, the UK might actually win a little bit.
There are so many practical obstacles to implementing a financial transfers tax. The Irish government, for example, which is within the Eurozone, has warned that unless it's done globally, it could produce a capital flight from European banks. So why do politicians, particularly in France and the UK, keep talking about it right now? The answer seems to have everything to do with national political imperatives and very little to do with the unity of action that they've urged repeatedly at European summits.